Hello everyone, Michael here from Storehouse Analytics. Welcome to the Storehouse. Today is the 3rd of July 2016. It's post-Brexit. The dust is beginning to settle, so I thought what a good time to do a new video. Today I'm going to be talking about entries. So I've been getting quite a lot of questions about the types of entries, when to take them, when not to take them. So it's going to be a quick video to get it sorted for you guys. But before we start, again, a big thank you to everybody for your support of the channel. Thank you for watching the videos, for your comments and feedback, for sharing the videos with your friends, with your circle. Really appreciate it. Keep the feedback coming. It helps me with providing you the type of content that you are keen to have on the methodology. It's been quite busy with communicating with different people over the last couple of weeks. It's been really great to chat with so many people and continue to build the channel. So thank you very much again. Really appreciate it. So as always, we'll start with the risk disclaimer. Please pause the video and read it. It's important you remember that trading is risky, and please don't trade with money you can't afford to lose. Okay, so moving swiftly on, I will go on to the charts. So I'm going to use a recent trade that I took, which I shared in the community and with my traders, and then the aftermath with publicly with people on the Forex Factory thread. It's on a trade on oil. So I wanted to show you that as an example of a confirmation trade. But before we talk about confirmation, let's talk about the second broad category of entries within the methodology, which is the set and forget type of entry. So that type of entry, there are scenarios in which you can use them. Broadly speaking, it's generally used by supply and demand traders who have other pursuits, a day job, or for whatever reason are not able to sit in front of a computer screen for hours on end. So people can put their trades into the market, leave it, and that when price gets back to the level, they're in the trade and they check their charts every so often, just monitoring the trade as it goes, whether it goes their way or it stops them out. The scenarios in which to use set and forget are, number one, it must be in line with the prevailing trend. So for example, the trend here is clearly down because supply zones are being created and respected, demand zones are being removed as price has been dropping. So a set and forget trade in this market can only be a short because the trend is down. I'll say that again. You take set and forget trades in line with the prevailing trend. So if the monthly is your biggest time frame and the trend on the monthly is down, when you're taking your set and forget trades on the daily, they have to be shorts. Okay, so that's the main criteria required when doing set and forget entries. How you enter the very specifics, it's a lesson for another video, but you can set your trade as in stop, entry, target. That's what set means. S for stop, E for entry, T for targets. Set, and then nobody ever actually forgets their trades, but people say forget it to make it seem like they never look at the charts. You still monitor it, but obviously it's not as closely as someone who is sitting in front of a computer for many hours on end. Okay, what I found is it's the second type of entry, the confirmation entry, that tends to give people the most difficulty and people don't really understand. So I'm going to spend a bit of time on that one right now using a trade example, which is I think is always best. So this was a zone that has been on the radar for some time now, since it was formed back in 2015, in the last quarter of 2015, and price has come back to it now. It's a drop supply zone, so price returned to it, and this was an area you could have placed a set and forget at. But I dare say not many of us, I'm sure some of us do definitely, but not many of us would have an account size big enough for us to take this monthly zone by itself, because it would just be too wide a stop. That's at least $5 in crude, which is a lot of money if you're going to trade in any amounts of size. So that's the first criteria for confirmation entries. They are taken off of the big picture zone purely because the zone is too large in itself to place the trade at it. We could have used this as a set and forget entry, but because it's too wide, we would use it. We would use a confirmation entry at it. If this were a daily zone, a 240-minute zone, then you could easily take it by itself, set and forget, no problem. It's in line with the trend. You've done your top down. You found this lovely, 240-minute zone or a daily zone in line with the overall trend. Boom, set and forget. But even still, you could still use a confirmation entry here, even though you can use set and forget for the conservative trader. Even though it's in line with the trend, it's got a big move away, lovely basing, but you still want quote unquote confirmation that what you expect to happen, i.e. price coming back into this level and then dropping, you want to see evidence, hence the term confirmation. You want to see evidence of that turn beginning to happen before you place your bet in this zone. So all set and forget entries can be confirmation entries, but not all confirmation entries can be set and forget entries, if that makes sense. Okay, so this was my chart before price returned to it, obviously. Looking at this zone, waiting for price to return. The second thing I want to tell you about confirmation entries is they must be taken at or within the zone. So you must wait for price to get to or enter in to the zone before you take a confirmation entry. Your middle chart will become irrelevant. So when price got back to this monthly zone, my weekly chart will be irrelevant. The trend would be irrelevant to me. By that time, obviously, I know this is a monthly area. The only thing I will be allowed by the decision matrix to do in this zone is to sell. So going swiftly down to my entry time frame, so we keep the lines, I'll stay on the same chart. So here's the daily. The minute price entered into the zone, so this is what that monthly zone looks like on a daily chart. Okay? The minute price gets into this zone, I want to start looking for opportunities to sell. The first thing that happens when price gets into a larger time frame zone, the first thing that happens most of the time is a loss of momentum on the entry time frame. The entry time frame in my time sequence is the daily chart. The first thing that happens, whatever your entry time frame is, whether it's a 1 minute or a 1 day chart, usually the first thing you're looking for is a loss of momentum. Okay, by that I mean, let's go back to the monthly for 1 second. So price is rising up like this. It's coming up, it's rallying into the zone. On a smaller time frame, such as the daily relative to the monthly, this is that rise up. And as you can see, the momentum is clearly in the up direction. So you want to wait. Point number 3 on confirmation entries. You want to wait for this momentum to show you its end, for this momentum to be lost before you take the confirmation entry. So you get a bit of a peaceful entry, is the way I like to think of it, compared to the trader who's just waiting for price to get to the level, sees a supply zone and places their entry right there as a set and forget. Didn't get much of a move. Still doesn't get stopped out though. Well, actually would have gotten stopped out because price went above. You wouldn't put your stop above the monthly because this is the whole monthly zone. And then you come up to this area. Actually, that line is there. And then you come up to here, which is the next zone inside. And again, you see the price just peaks above it. Depending on where you place your stop in this trade, you might still be in it, depending on where you place your stop if you entered for a set and forget. For confirmation, you're still waiting. You haven't seen a loss of momentum because you're beginning to now draw your trend lines. Price has reached the zone, so you begin your momentum assessment. Okay, that's still the momentum there. It's not lost yet. There's the new momentum as you're watching price, so you know where price is. It's on the monthly. It's in the monthly area rather. So we're on the daily. We're looking for that loss of momentum, and this is where we found it. So the loss of momentum here was the break of this trend line by this candle. Now, if you look at it, that's the candle that broke the momentum here. Not this close of this red candle. That would be too aggressive for us to say that the trend line is broken. We wait for a candle that is away from the trend line. So that candle there is the one that confirmed to us the loss of momentum. In this case also, well, we actually have a demand, in fact, a couple of demand zones broken. The third one down was the one that held. So by definition, as we say, when two demand zones are taken out, even if you didn't have this break in momentum, that would have qualified as a supply zone just because it broke that one and that one, because it took out demand zones on its way down. For our purposes, we'll notice this loss of momentum creating. So now I'm going to take out the monthly areas. They've served their purpose. And here we have our supply zone. So this was the trade. I went, just to talk you back through it again, monthly chart, supply zone, too big for me to place a set and forget at, but I know it's an area that I want to sell at. Go down to my entry time frame, the daily chart, and I'm looking for evidence that what I expect in that monthly supply zone is beginning to happen before I place my trade. What I expect to happen, obviously, is for price to get to the monthly supply zone and for the sellers on the monthly supply area to start exerting themselves and showing their power by selling the market down again. So I'm coming down to my entry time frame to look for the evidence of that. And I find that the first evidence usually is the loss of momentum. And then obviously the best, strongest, I would say, is the removal of opposing zones on the daily time frame, the entry time frame. Whether the entry time frame is 1 minute or 1 day, as I said, it doesn't matter. So we find this supply zone it took out opposing supply zones. This one was the one that held. Opposing demand zones. This one held. It broke the trend line with this candle. That was the trade. And now this has also broken this low. This drop has broken this low. Still within this area, which is what makes shorting in this area a bit more tricky. You might be wanting to wait for it to penetrate a bit deeper into here. But there you go. That demand zone is still holding. It's held once, it's held twice, but with a deeper penetration, so you know the orders are being taken out here. But this was the short that I posted on the Forex Factory thread and talked to my traders about. And in fact, if you go down to an even smaller time frame, say, was it a 4-hour or a 6-hour? Yes. So even if you wanted to tighten your entry, this is a bit aggressive because you're going from monthly way down to a 4-hour, but it is definitely doable. I know people who do that easily. So you come to the 4-hour and look at this area. You see that this area is within the daily. Let me take this box out so you can all see it. You see this beautiful drop, base drop? That was the zone that held everything down. So you could, if you were being aggressive, you would have taken this zone, which would have obviously worked a treat. Look at when price returned to it here, and then the big fall there. Here we go. Yeah, so those were the two entries in that, and that was that. Yeah, those were the two entries right there. Where you would have placed your stop would be somewhere above this. What is aggressive about it is if you place your stop, for example, here, your stop would have still been within the overall bigger time frame daily supply zone, which is aggressive a bit because price could easily have continued to the higher supply zone here before it dropped. So that's something to keep in mind for you. When you're taking this zone, it helps you pinpoint your entry, but your stop should still generally be safely placed above the zone. Aggressive is above the smaller time frame zone. More conservative placement is above the bigger time frame zone, which is the safest. Okay, so there you have the confirmation entry. Quickly talking over it again before we finish the video. Number one, you have a level that's with trend, but is too big that you can't take it by itself, or you just want to be safer and you prefer to take confirmation entries when you've noticed the evidence that what you're expecting to happen is beginning to happen. Set and forget entries can be taken on some zones where you would also take confirmation entries, but generally speaking, you wouldn't take confirmation entries on zones that you're only allowed to take set and forget entries. For confirmation entries, you come down to your entry time frame only once price gets to the bigger picture zone, and then you start looking for evidence for you to take the trade. The first most obvious evidence is usually the break of the trend line on the smaller time frame, not the bigger time frame. That trend line will still be intact. Once you get that evidence, then you know that what you're expecting to happen is beginning to take place. Otherwise, there wouldn't have been the loss of that momentum. Okay, so that will be it, I guess. That's a confirmation entry example. I hope it helps you. Let me know what you guys think. Send me the feedback, and continue sending the feedback so I can continue to provide more videos of use to you guys as well. So for people who want to contact me, these are the contact details. to contact me on. I'm pretty active, in fact, daily posts on Trading Institutional Order Flow, the Forex Factory thread. You can send me a public or a private message there. For people who are looking to discuss more personal things with me, storehouseanalytics@gmail.com is the email address. You can leave comments, obviously, on the YouTube channel and in the comment section under the videos. I tend to post these videos and stuff also on Facebook and Twitter, and some people have gotten in touch with me that way as well. So there you have it. Just a quick update on a couple of things. Working on storehouseanalytics.com. We'll let you know when that's up and running. That's all I'm really allowed to say about that right now. But we'll let you all know. And also for the webinar, it's going to be taking place this month. As I've said to people, you can send the questions either directly to storehouseanalytics.com or to this email address, storehousewebinars@gmail.com. Again, just to help me provide you with a more tailored webinar than me just going over stuff. Depending on how much feedback I get will help me decide on the shape and form of the webinar. So thank you all very much for watching. It's really humbling that there's been so much interest in my work, and for the people who've come into the program, you're already making money. So thank you all. I will see you again shortly. AKT out.